I don't want to be unpopular with you, but sometimes the journalist community with your K recovery, L recovery, M recovery, L recovery, we're creating, if you go down to brass tacks and not look at it top down but bottom up, you talked about private investments. I don't know what the numbers are. There's many economists will know it better than us. I'll look at 2 or 3 industries. If you look at paint industry today, frankly, there's too much private capital going on. If I look at that as a reflection of what bids were made. If I look at cement, the person you talked about, his son is getting into cement, Jindal. If I look at EV, our biggest winner today, Srini's colleague, Velayan, after making a huge success in financial services, huge service success in Crompton Greaves, is now doing EVs. So I'm just saying, if you look at it bottom up, wherever you see an opportunity, I think as an entrepreneur or as an investor, there is a plethora of capital going in there. I don't think there's any shortage of equity capital. Banking, Mr. Khara will know better and the others will know better, but I think today, even where debt in the absence, I think banks play a critical role, SBI especially, but now with the advent of private credit, Rashesh probably has a bigger balance sheet than most of the banks or NBFCs around here. And just now, almost anything that can be financed is probably financed. But again, if I'm setting the rules of a regulator, I don't want microfinance companies and MSME finance companies. The issue is consumer consumption. Is that, what are you paying for it with? Is it family equity or are they taking consumer loans to do it, right? That's where the leverage cycle starts getting a little out of control. Microfinance, the issue was the same borrower was borrowing from 4 banks.